My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
All right, guys, welcome back to Property Profits Podcast. I'm your host, Bryce Kaminsky, filling in for Dave DeBow. And have you ever wondered how a finance expert transitioned into a successful real estate investor and self-storage developer? Very hot topic these days. Well, today my guest, Jake Rosenau, I think it was. We had a conversation before the thing, from NVDR Developments, is here to share his fascinating journey and insights. Jake, welcome to the show. I apologize for the last name. I'm doing my best out here. How are you?
Bryce, I'm doing well, and hey, it's all good. It's not the first time and it's not the last time. So
for the record, let's hear it properly from the mouth.
It's Jake Rosenau.
Perfect. So interesting, like finance experts, a lot of people would stick in that because while the money I've heard is good, I'm not a finance expert, so I can't say left or right whether it is or not, but what got you into, with a background in finance, what inspired you to venture into real estate and ultimately the self-storage development?
Seeing everybody else in real estate not, being able to work for themselves and not for someone else. I realized very quickly working with people at or near retirement age, anywhere from 60 to 70, and just decided that that's not for me, and I did not want to do that. My wife and I were able to make some adjustments to our lifestyle to allow for a full-time job during the day for the both of us and a full-time evening job for the both of us coming into real estate. So once we were able to put the two and two together, we just jumped with both feet into real estate and now furthermore into self-storage.
How long did it take to transition? What was that time like?
From the financial background into real estate, or from real estate multifamily into self-storage?
Well, there's always like working for someone and then working for yourself. And there's usually like, okay, we got to get a war chest, a nest egg together, and then make that jump. So
yeah,
how long did that take?
Sure. So we initially started real estate in late 2017, early 2018, and started, like many of your listeners, like many of your guests, with a single family property, got into BRRRRs, did a couple flips, did a couple conversions, bought a few multifamily buildings, and had more or less the residential under our belt. And in 2022, my brother-in-law had attended a mastermind, and on his way back from the mastermind, he called me saying, do you got interest in self-storage? This is what, we need to get into. And from there, we transitioned both of our businesses and decided to get into it together and take down $20+ million self-storage facilities.
Yeah, no tenants, no toilets.
Well, there's one. There's one in every office.
The toilet that you have to fix. But it's not. One question I have, and some people, are likely curious. Self-storage, do you end up with bug problems? Do you have to do bug and pest control in these units? Because in a regular tenant situation, you get the bugs and people go out and you spray and you pray. And so people moving their stuff into these self-storage units, do you have to deal with that sort of thing, or not yet? Or what does that look like as far as someone thinking, oh, no tenants, no toilets, but what's the catch?
So one of the advantages mainly for us is that right from the very beginning, our team is very close with some of the biggest REITs in the entire US when it comes to self-storage. So we get some input from some of the biggest companies out there to come in and actually manage those facilities for us. So when we've completed one of these Class A that are, one of the newest, most up-to-date, largest facilities coming to market, they take notice, they want to manage it. They come in, they take care of all of that. They'll set up maintenance schedules, whether it's spraying for bugs, whether it's cleaning the units, et cetera, et cetera. So that's more of a hands-off for us.
So you're on like the top level. You're not self-managing any of this stuff.
No, we're not self-managing. We are bringing on experienced, high-value REITs to come in and manage and look after our facilities.
Because yeah, that price point definitely is in the syndication model. Like that isn't typically capital that you're like putting five guys together and being like, hey, let's all bring $5 million to the table. So um, can you elaborate on how that process works and how it benefits the other investors in the deal when talking about syndicating that self-storage? What are the pros and cons to self-storage syndication, and what can investors that invest with you expect out of the syndication?
Sure. So a syndication, well, it starts out, you've got to have a property, you've got to have a deal, and then
Mm-hmm.
you've got to have some level of interest in people wanting to invest. We will syndicate and typically look to raise anywhere from $3 to $5 million, depending on the project at hand. For our project in Houston, Texas, we raised 3.1 million.
Mm-hmm.
For our project that we've got on the go in Punta Gorda, Florida, it's closer to 5. We've since also added square footage. We've added and made it a fully solar facility. And we have another site that's in Port Charlotte, coming out in Florida as well. That's going to be in and around the same race. So for self-storage syndications and in our deal specifically, we will go out and we will sell shares. And depending upon how many shares an investor chooses to buy, they get X number of ownership. So while we have their money, we pay them an annual preferred interest. They get paid that monthly, the very next month after we receive their capital. Once the facility is then built and we've passed it on and got it into the lease up stage, that's at that point, once it's fully leased up, we will refinance it, pull all of our money back out of it, pay off the construction loan, pay off the limited partners or our investors, pay them back their capital. If there's refinance proceeds available, we all share in those. And in our syndication, we actually will keep our investors on for the entirety of the project. So at that stage, once we've refinanced, normally investors will be said, okay, thanks very much, we'll see you later. Here they remain, they keep their equity ownership going forward, and they get a piece of the annual net cash flow that the facility creates as well. So we typically, it's hard to kind of put a percentage on, but we're anywhere from 15 to 25% return on investment. And then you still have the equity and the future cash flow on top of that when you have no money remaining in the deal.
Oh, so like they can exit at some point once they get paid down, and then they've got a piece of the action that
Yes.
they can then sell the shares.
Well, they could sell
Or
the shares, but
they sell them back to you and then you sell them to the next guy. Like, how do I get out? Like I'm in, I gave you, I don't know, 200 grand, and
yep.
I'm in, and you're gonna pay me back my 200 grand over some term as the thing's profitable, and then I'm out. I've gotten my 200 grand back. Now, what if I'm like, that was cool, but I want to like buy a yacht, so I want my money back. How does
Yeah,
that work?
so in that situation, again, your money is returned once the facility is refinanced. That's typically a 3, maybe 4 year window.
Okay.
Once we refinance, we pay you your full capital back. The pref stops being paid. You get your share of the refinance proceeds, and then you hold the equity, the remaining that is not mortgaged or leveraged, until we either sell the facility, or you sell it to somebody else, your share. But at that point, you have no money invested in the deal, so it is almost a no-brainer to hang on and let this asset appreciate over time.
So I get the equity as it runs out over, let's say I'm like, cool, I got my money back. I'm gonna go buy my yacht. We refinanced. And then I've got an equity piece. And then in like 10 years, you guys say, you know what? I want to like buy something bigger. You sell that thing. And then there's an investor payout on that
Yes.
deal,
Yep.
equity, whatever. Let's say I'm like, I don't know, 1/10 of the deal on $1 million thing or whatever, a fifth or $2 million thing. So then we're half of the thing, and you guys are half of the thing? Like the split is like you guys are as the owner manager, there's like a 50 and then the other 50 is divvied up into these shareholders?
Close. We're about a 70-30, and 30% is normally given to the limited partners, the LP or the investors. We as GP will hold on to the larger amount because there's a few more pieces to the puzzle when you're
Oh
doing
yeah,
something this big.
insurance, making sure it doesn't burn down, making sure that the management company is managing it. So that's interesting. So definitely sounds like a great investment. When you approach investors, this is a pretty attractive return. Could you walk us through kind of where these people come from and how you structure that procedure from like interest to meeting to capital for someone who's thinking, you know what, I'd like to have a meeting.
Sure. So in my case, a lot of my connections come from, prior relationships, contacts through friends and family, going forward now through investors and reoccurring investors, or meeting at just real estate networking meetups, because I find in Ontario specifically that there are a lot of pissed off multifamily residential property owners, and they're wanting to either exit or start, they're sitting on capital that they don't want to deploy into the residential markets here,
Hmm.
because they don't want to continue to deal with the headaches that they already have. So in being able to provide a solution, or a solution to that problem where they can invest into a good deal and still make some good capital off of it, then it's a fairly easy sell. So once you're interested and we present you, obviously we have our full presentation that we walk through all of our due diligence and our feasibility studies and our projected values and, market cap rates from prior years. At that point, once you've decided that you want to be an investor, or you want to invest in that, we have our assistants send out subscription documents that you can review. You can review with your attorneys
Yeah,
or
your
your
legal
lawyers.
team. Yeah.
Massive document, where you're going through it and you see everything that we have budget wise. You see behind the curtain because you're essentially an owner.
Yeah.
So at that point, you go through the subscription documents, you sign them, you send them back, you fill in the date that you want to fund it, and we'll meet up and present a check, or we'll wire the money, or however we need to do it. These subscription documents we spend nearly $100,000 on for both Canadian and the American side, and they are approved by the CSA in Canada and the SEC in the US. So everything is on the up and up. It is a full legal agreement, and you're now an owner. So at that point, we continue on with sort of monthly emails, just little updates to show you where we're at, and everybody has our phone numbers. So if anybody has a question or a concern at any point in time, I would always ask that they call us.
Yeah, definitely. So you started in multifamily residential and then
Yes,
you navigated, you were like, I've had enough. Especially like I guess it's multifamily in Ontario,
yes.
which that's like the expert mode of multifamily. I don't think there's a more challenging market uh to rent to rent property to. I can't think of a more challenging market. Maybe California.
That's
Maybe
what I'm hearing our comparable is.
yeah, like that's the comparison. It's like no one wants to touch California and rent there, and no one really wants to be in Ontario. So you got tired of that and decided uh there's better returns south of the border. Do you own any multifamily, not multifamily, do you have any storage in Canada?
No, we haven't broken through into Canada. I don't want to say that we wouldn't. But in the US, there is far more demand. We're targeting the southern states where they have no basements.
Yeah.
The demand is a square foot per
And
person
lots of dirt
higher.
too, right? Then no basements and tons of like empty dirt off of the interstate. So you're like, cool, let's just build that thing. So are you constructing these things? You're mostly taking over existing projects.
Well, we're doing ground up. So we've got
Nice.
our acquisitions manager actively looking for sites that suit our buy box. Once we found a site that kind of suits our buy box, we launch an LOI. We get it under contract. We start our due diligence stage and launch those. Once that's kind of completed and we know the project's a go, we start to raise capital
Nice.
and take it literally from the ground, from dream to reality to a full-on self-storage facility and everything in between.
So, you mentioned timelines as a significant challenge. Could you dive a little deeper into how you manage these timelines effectively amidst, various external factors?
Yeah, it's called having an amazing team. And, it's not just myself, it's not just my partner. We have an amazing team scattered all over the US. We do it virtually, but we have a project manager that has a wealth of knowledge, a vast variety of experience and specific experience in self-storage. So we've got him, he's part of our ownership group. So when I talk about the 70-30 split, we do give out ownership shares and equity shares to other members that contribute to our success. So it's not a 70%, hey, just coming to my partner and I, 30% to the limited partners. It is, we've got other people involved along the way that we bring in and give equity shares to. So in keeping with those timelines, we've got a project manager that is on top of all of that. And we essentially manage him and the build with him.
Nice, nice. So with, especially when it comes to investors, building trust with the investors is a cornerstone of success, especially in real estate on that scale with other people's money. You're not just putting your own money into a deal and turning it around. What are some strategies or principles that you guys adhere to in fostering strong investor relationships?
Yeah, that comes from even my previous history before. Being open and honest and having solid communication. Private lending these days, it seems like you cannot get proper communication from anymore from the lenders or from the people borrowing the money. Communication is first and foremost. And, obviously there's going to be no project that is just going to be smooth sailing. You're going to have bumps in the road. You're going to have the ups and downs, but it's how you communicate with your investors and the people that have trusted you with, you know, their savings.
Yeah, $250,000.
Yes, right. I mean, hey, it could be 50,000, it could be $1 million, it could be $2 million, but at the end of the day, hey, I want to communicate with you. I want to bring this to you because if I bring up my problems as well as the good things, maybe there's going to be you have some input and that can help us solve these problems together, right? So if I had to say, that every obstacle it does present an opportunity, and with every bump in the road, it allows you to just further communicate and strengthen the relationship.
So let's talk about the future now. What future plans or goals do you have for NVDR developments? Anything upcoming or any expansions on the horizon?
Yeah, we've got a couple of things. So we're always looking to add sites. That's our first and foremost. That's going to be our bread and butter, is developing these facilities. But at the same time, we're also creating sites that maybe we don't do, that we can assign. We're looking for partners, somebody that wants to take on their own $20+ million facility. We will have properties available for them, that we can either assign or join up and create a partnership on. JV on, or at the same time, we are also coming out with a education program, and that's going to help everyday real estate investors go from 0 to 100 and go from not knowing anything about self-storage to knowing literally everything.
Yeah, you got the
Right from
blueprint.
us. And we're going to throw it out there, and anybody that's interested in signing up, that is coming in the next couple of months. And we'll give them the A to Z or the A to Z notes on how to do this and allow them to take down the same deals that we have done.
So when it comes to, success in real estate so far, what would you say your unfair advantage is? What comes easy to you that other people might find difficult to do?
Well, we've got experience now as Canadians investing in the US. That is probably, there are the most headaches being cross-border. You need to have partners, you need to have people on the other side that can help you make that transition easier. Part of the equity ownership is bringing on a sponsor, right? And getting a sponsor in the US, somebody with a high net worth that can help you approve for these multi-million-dollar loans. My partner and I signed on a loan this year or last year for our Houston project for over $10 million. We're looking at a $13 million loan likely for our Florida project. They're not going to hand that in the US to a Canadian. So
Mhm.
we've made inroads with a number of American investors, and that helps us go a long way when we come to need financing and take on these big deals, is you need some of these people in your corner.
Yeah, definitely. I think those are probably, I guess here's a question. What advice would you have for Canadians thinking about investing in the United States?
Do it. Stop thinking about it and do it.
Now, what would be like some first steps? Because it feels like, I've done a little bit of investing in the States as in partnerships, but never on my own. And there always seems to feel like there's like a wall of paperwork between the two countries. Um, how did you guys navigate the origin of this thing? Because did you buy like something small or did you just go straight, say, I'm gonna go, we went to the seminar, now we're just gonna buy some land and build something? Like, was that your first go at it, or what was the first step over the border for you guys?
Yeah, our first step was really exactly that. Here's a deal, we got to act. And there's only so much thinking and learning and educating that you can do. And at some point, you're just going to have to jump. And if you don't make that jump, you're going to miss an opportunity and a learning opportunity at that. So I can tell you that yes, you're going to want to start maybe with a mentorship, spend a little bit of money, educate yourself on the area that you're getting into, take a course maybe, and learn about what you're wanting to get into. And then you're going to want to kind of use your connections and build yourself a team out. You're going to want, cross-border accountant that's going to be able to help you. You're going to want to meet some connections at some banks. You're going to want to learn the process of what it is like to close on a property in the US, because it's vastly different than
Yeah.
here in Canada. You work with title companies and attorneys in the US versus just going to your lawyer down the street and signing 4 documents.
Yeah, they just handle it. In Canada, it's just like, oh, I gotta go sign. But in the
Yes.
States, there's a few more layers, transaction coordinators, escrow. There's a bunch of other like pieces, and state dependent too. The procedure isn't really uniform. I've seen or I've heard. I haven't done it myself, but what I've heard is that state by state, it can even be different as to how you close on a property. So
Yep.
um, definitely. So you guys did have an education going out there. You got something or you did some training to break the ground. Did you buy into that thing or did you just, see the weekend seminar and say, I got enough to start taking a look?
So what had happened is, yes, it was the mastermind that we had attended, and my partner ended up taking on a mentorship role with somebody in that space. They've since become partners with us, and again, they're on the GP side with us. As Americans that are doing this, we're able to learn. It's not about reinventing the wheel; it's about tweaking the wheel and making it more efficient. So we've been able to kind of add our spin to it, but have a tried and true method that we have in place. And through our education program coming out, it's going to be available to anybody who's interested.
Yeah, help collapse a little bit of the time frames. I always say, like, if you want to run a McDonald's, you should probably just buy the franchise. Like, there's no reason to be like, is this the best burger? Let's tweak it some more and make our own thing. It's like, okay, if you really want to own a burger shop, you get a franchise. You want to run a Subway, buy Subway, and then make it the
Yep.
best Subway you can. But still, like, the starting position is worth the investment. So, um, if people want to connect with you, they want to find out more, what should they do? How do they find you?
Well, we've got our NVDR Developments website, nvdrdevelopments.com. And you can find me personally on Instagram, Rosenau Holdings, or Jake Rosenau on Facebook.
You want to spell out the Instagram for the people listening in the car?
Absolutely. ROSENAUHOLDINGS. And I hope if you're driving in the car, you're not typing this into your Instagram as I'm speaking, because that's a no-no.
Maybe you could just like quickly pull
Just
over and do it. So Yeah, man, I really appreciate you demystifying a little bit of that stuff. I mean, it's a big trend right now, and it's kind of I feel like you're on the front side of that wave. I don't think it's crested yet. I don't think it's even close. I think that as the economy continues to get harder, people are downsizing into smaller houses and they're going to need to like they have this like plan. They're like, we're gonna downsize, we're gonna put all of our stuff in storage, and one day we're gonna get out of this mess and
Yep.
then bring it all back out of storage. And then, maybe you end up like in storage wars where you're like reclaiming units and selling that stuff off. Cause it's kind of like it goes in one or two ways, it seems, with the storage. Because I've helped some like homeowners in challenges move stuff to storage, and I don't know, 50% of the time they end up defaulting and their stuff ends up just, getting reclaimed through non-payment. So definitely an expanding trend, and there's no shortage of demand. When I was down in Houston in December, and you drive along the interstate and self-storage, self-storage, self-storage. So no basements, dilapidated garages, they're gonna need somewhere to put their stuff. So yeah. I really appreciate you stopping by, man.
Hey, I appreciate you having me on here. I know it's been a little bit of a work in progress, but I'm happy to be here and I appreciate you taking the time.
Yeah, no problem. Until next time, guys, we'll catch you on the next episode.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.